and she's really the smart one at the table. Genuinely has a lot of knowledge with regard to everything from the service side to claims and the detail that goes into your plan. I do want to, generally, I want to just start out by talking about the plan that you have. Make sure that there's, I guess, as much clarity as possible. You currently are with Performance Health is your TPA, okay? That's the name that you actually see on the cards for the employees. Cigna is the network, and I think it's important to start with the Cigna portion of it. Cigna plays a very important role in your plan. Here's why. The network that your employees follow is Cigna's network, which is the largest in the country. Your Blue Crosses and your UHCs and things that we hear of more, especially in the Southeast where we're located, actually are not quite the same size as Cigna. That's why your FedExes, your Baptist Health Systems, casinos, and things of that nature utilize the Cigna network. So, number one, Cigna plays a very important role in your plan. Obviously, the repricing discounts and things of that nature are important, and they have the strength to be very beneficial in that, because your claims that are net that ultimately get paid are whatever that repricing and discount benefit is. So that's very important, number one. Number two, you're in a self-funded contract. You used to be in a fully insured contract. The contract that you're in is self-funded, but it is also the same plan that all the counties that we have in the state of Arkansas are in. 3 years ago, when we came in and started working in the Arkansas area, we actually have business that we manage or assist in some capacity in how many states?
30.
Around 30 states. And ultimately, the state of Arkansas was kind of a carve-out for us. Don't know why. We had Missouri and Mississippi and Tennessee where we had a large presence, but 3 years ago when we came in, Justice Nelson, there wasn't a lot of people that were utilizing us and what we were doing in the primary secondary approach, which is important because we go from a primary plan where they're the only bill payer. There is no help. Whatever goes into the claims that have to be paid are paid by them. We obviously use an approach that just separates that where there's a primary and secondary. And why was that important? Y'all may or may not remember last year we talked about claims. If you look at where claims fall, paid claims, 80-something% of them never reach $5,000. So about 16% of your employees will be at what we call CAT claims, which is 5,000 and above. So what we do is we believe, and it works, if you can find a way to manage a plan where the majority of those claims, that 84% Shane, I'm sorry I went ahead and got started, but it's a Shane Martin.
How are you doing?
Where we can carve out that 80-something% of those claims and not have that hitting your primary carrier, then it gives us an opportunity to be able to control those costs a little better. So we utilize a secondary plan. We just merge the primary and secondary together. The secondaries play in that first layer of claims, which is again 84% of it. And then those CAT claims, or those that are 5,000 above, are all that your primary carrier is paying. What does that do? It just allows us to control costs better. Because if the primary carrier is having to pay everything, Justice Nelson, from first dollar after the deductible for the employees on, then it's a little harder, for them to be able to control that cost. So you currently are in a self-funded contract. What are the benefits that all the counties been in? Number one, in a self-funded contract, you have more control over the plan. Ultimately,
Stop right there and explain to us what you're talking about in self-funded, because we pay an annual contract. Tell us what self-funded means to you.
Self-funded just means that you're going direct buying your insurance. In other words, let's talk about a fully insured versus, you want to talk about that?
I can. So on a fully insured contract, like with Blue Cross or United Healthcare, you just pay 12 monthly payments in. And if you have a good claims year, then maybe you get a rate hold or a 5% increase or something like that. And if you have a bad claims year, then your rates go up drastically, right? But they're never gonna call you and say, we need more money. It's just your 12 monthly payments. At the end of that time, if you don't like whatever they're doing, then you can stop and you can go with somebody else. And let me say this, your Blue Crosses of the world and your United Healthcares of the world also have what they call reinsurance, which is if their claims exceed X amount of dollars, they tap into a reinsurance carrier to help pay the claims for them. So all insurance companies have that. It's not something that you see just because it's pre-packaged. That's fully insured, is all cookie cutter pre-packaged plans. So on the fully insured basis, that's the only model that you see. Y'all are used to that. Everybody's pretty comfortable with it. On a self-funded basis, there's two different ways to self-fund. There's something called traditional self-funding, which is what casinos and Baptist healthcare systems do. Y'all don't do this. But what they do is they pay in an administrative fee every month, it's very small, to a TPA, such as Performance Health. And then every week, Performance Health says, well, here's the claims that your employees have used this week, write a check for them. Every week that happens. Every week they write a check for it. Whether the claims are $200 or $200,000 until they reach their reinsurance amount, and then they also have reinsurance that picks up and pays that. What y'all are in is kind of a hybrid of the two. It's called level funded, self-funded, and so it looks and smells like a fully insured plan. You pay 12 monthly payments. They never come back and ask you for more money. Your claims get paid by the carrier, just like with a fully insured contract. The only difference is that it has all of the benefits of being self-funded. And by that, I mean that money that you're paying in every month, yes, a portion of that is admin costs, just like it is to Blue Cross or just like it is on a traditional self-funded basis. And you do have that admin cost that's in that premium. But then the rest of that premium goes into your claims fund. And that money is your money that sits in there. So if you have a good claims year, that money is still yours. It doesn't go away. With Blue Cross United Healthcare, it goes away. Right? They're never going to cut you a check back and say, oh, this is what was left in your claims fund. Here you go at the end of the year. With this plan, you can do that. So on a self-funded basis, that money that you put into that claims fund is your money. It's always your money. On top of that, a big profit center for fully insured carriers is prescription medication. I think we all know that pharmacy in America is outrageous. The cost of medications is ridiculous. It's a huge money maker for lots and lots of people. Not us. Not any of us at this table, but the big people up in Washington and all the pharmaceutical companies make a ton of money off of that. The carriers that are fully insured also make a ton of money off of that because there are things called pharmacy rebates that happen with all brand name medications. And what happens in a fully insured world is that the Blue Crosses and United Healthcare keep those pharmacy rebates that they get. On a self-funded basis that y'all are on, the pharmacy rebates go back into your claims fund. That's a huge deal.
Very important.
Huge deal.
It's your money, not their money.
Right.
Does that make sense?
I've never seen a check come back.
That's where I was wondering where the check is.
It goes in.
It goes into your claims fund. So
They come
Performance
back-
Health is a TPA.
No, I thought the
y'all
check that we were supposed to get at the end of the year if we got money left over. Where's that check? Y'all got it today?
Get
They do
back.
not. So if you have a good claims year, you do have money sitting in your account, and you can choose what you want to do with that. Most of the time, on a self-funded basis, employers choose to leave that in there to lower their costs the next year, or leave it in there in case they have a big CAT claim come up the next year, and they want to make sure that there was enough money to fund it without having to have an increase the following year. So there's lots of different things that you can do with it. Of course, if you decide to leave and move away from a fully insured and go back to, or leave a self-funded and go back to a fully insured, then once the run-out claims are done and that claims account is finalized, then any balance left in there would be cut back to you in a check.
What about a bad year?
On a bad year, you have reinsurance, you've used up your claims fund, your reinsurance pays the rest of it.
And what happens the next year?
Your rates will go up just like they would with Blue Cross or United Healthcare.
What's the difference in the self-funded that we're doing now and then the old ERISA type plans? Is this not an ERISA plan?
No, y'all are not subject to ERISA law. So there's not really ERISA plans and non-ERISA plans. It's, are you subject to the ERISA law? And a county government is not. So counties, any government entity, a school, a church, religious organization, those are not subject to ERISA laws. So that doesn't mean that the plan does not follow certain ERISA guidelines just because it's a standard that Blue Cross follows and United Healthcare follows as well. And I know that when we met with the judge, he was concerned about ERISA because he said that y'all had something that was an ERISA plan before and it caused some big, huge.
They disappeared.
Okay, but that had nothing to do with ERISA. So ERISA is just a federal law, just like COBRA or FMLA. It doesn't change your plan. It doesn't cause your claims to not be paid. It has nothing to, the two things have nothing to do with each other. So the problem that y'all had with your old plan that he was mentioning was because there was a reinsurance company that was basically a scam artist. Sounds like that wasn't even in the United States of America.
Pango.
So, yes, which is insane. So the reinsurance company on your plan is Gerber, and I think everybody in the room's probably heard of Gerber. So they're definitely based here in America. They're an A-rated company, and there's nothing. I mean, I would feel safer with Gerber than I would with most any other company in America.
So are you, if I understand, so you're saying if something happened to the first insurance company, like Stop One, then you're saying, and you guys went out of or that one went out of business, then Gerber would pick up all the claims?
Yeah, Gerber reinsures it. Yeah, so any claim, so once your claims fund, say you put in, I mean, just round numbers, $100,000 into your claims fund, and you have $300,000 worth of claims that year. They're gonna take the $100,000 out of your claims fund and they're gonna pay your claims, and the other $200,000 Gerber's gonna pay.
So like we're paying that self-insured to you guys though, what if, or whoever that first stop is, and what if that company goes away?
Well, I don't think that they're going away,
Well,
but if they were.
But a lot of insurance companies, if they go away, then they pay into like a state, you know, then a bigger company comes back and pays those claims.
Yeah, Gerber
Will you
would
guys
still
do that?
pay it. Gerber's
Yeah.
not going anywhere.
Yes, ma'am.
I know I'm not making a lot of sense.
No. Well, first of all, you don't, your insurance, your plan is a self-funded plan. So what you're doing is you're buying it direct. Basically, just like Michelle was just saying, even with Blue Cross or UHC or anybody else, understand that when you pay in those premiums, like she just said, they have a reinsurance on the top. They're just charging you guys for it. Does that make sense? I mean, what I'm saying is they prepackage a plan on the fully insured world. They just say, okay, this is your claims. This is how much we know that your price will have to be to fund those claims based on this year's expectations. So they look at the claims and the loss ratios and, who's coming back, or who's still on the plan. If this person has gone through, something, maybe it's ended. So we have the expectation. So they establish a rate on that, and you just pay into that rate, and then they simply, they don't pay 100% of that. They're not paying it. If it goes through the roof, they've got reinsurance on the top side that's helping with that. All you're doing is you're just, instead of paying Blue Cross, UHC, whoever to build it, you're just buying it direct. So all you're doing is saying, I have a TPA, Performance Health, and all they do is pay claims. They just operate as your claims payer. Does that make sense?
So so what you're saying is there's not a way the county could be left holding the ball where we have employees that are left where their claims are not getting paid.
No, ma'am.
To where we would have to pick that up.
No, ma'am. No, ma'am. Like I said, all you're doing is you're funding your claims on expectation. Your claims are through the roof this year. Through the roof. Y'all just had a bad year. And I'm fixing to share some of that with you. And it's just, you can't help when people get sick. We can't help when people have critical illnesses, and that's why we have health insurance. And when those things happen, That, you simply just, you deal with it. It gets to the end of the year. Sometimes you have a good year and sometimes you have a bad year. But ultimately, all that's happening is the money that was set based on your expectations last year was set aside, and it's just paying those claims. That's all it's doing. Then you have a reinsurance contract, and like Michelle just said, when it runs through whatever was set aside, whatever you paid in for your expected claims, if it goes beyond that, the reinsurance which is Gerber, they pick that up and they're paying it, just like they would if you were in a fully insured plan.
There's not a whole lot of difference between a fully insured plan and what we're doing right now. Not a whole lot of difference,
No.
except that, the reinsurance people, the only way I know Gerber is baby food, but if they're an A-rated company, they're a good company. They're stout,
Very
and
stout.
they're gonna pay the claims. They're gonna pay the claims that our insurance can't pay. When it comes back in next year, we're gonna pay the difference because of the the losses that we've had.
Yes, sir, which would be the same if we were in a fully insured plan.
Exactly.
So in a fully insured plan, you come in, they go, man, we had a bad claims year, so you come in with a rate increase. If you have a good year, then, the two, if you have a bad claims year, the two are the same. Just come in and say, hey, you're gonna have to put more money in to fund your claims, unfortunately. If you have a good year, then the beauty of that is, in your plan, that money that you've paid in is still there. So if you have, let's just say, a 50% loss ratio in your plan, that money is still there. It's in your claims fund. It didn't get paid out in claims. Does that make sense? But if you are in a fully insured plan and you have a good claims year, where does that money go? It's gone forever. You paid in, you have a 50% loss ratio. They don't come back and say, hey, we're handing you that money back. You simply just said, well, it's paid in. Once you cut a check on a fully insured, you cut it, and that money is paid out. On self-funded, you give yourself the opportunity for the county to be able to keep that money when you have those positive years.
Let me ask you about your self-insurance pool. I know y'all are relatively a new company, and y'all have come up with this reinsurance and thing program, and you've been selling it, from what I understand, in Mississippi, and you moved into Arkansas 2 or 3 years ago, and the information we had last year was it was very favorable from the county judges and so forth. My question is, on your reinsurance, not your reinsurance, but on your self-insurance pool, how large is that pool? Is everyone pooled together? Is it by states? Or is it by, what's the boundaries on the pool?
Well, ultimately, you're getting a benefit. Let me say this: your pool is your money. Okay, the benefits in just the, what are we up to now, Shane?
Probably about
12.
1,900 in Arkansas alone.
12, 13, counties, and I want to go back and address, we're just your broker, okay? We simply operate as a broker. We're anything but traditional. And that's always, we do something different because it has to be done in order for it to work. But what we're doing on the primary, secondary side is, there's the state of Oklahoma has it for their employees. It's solid as a rock. It's just simply a secondary plan that pays the first layer. But going back to your question, your claims pool is your money and your money alone. That way, if you have a good claims year, you're not giving that money to another county. Does that make sense?
And on the reverse side, if we have, if someone else has a bad year, we're not being paid, we're not carrying part of that.
Yes, sir. That's exactly right. But what you are getting the benefit of is on the reinsurance side of it, you're getting the benefit of those larger numbers. We have to create larger numbers to be able to buy cheaper. And so you're getting the benefit of that.
So our losses are figured against our payments,
Yes,
our
sir.
money,
Yes, sir.
nobody else's.
Yes, sir. That's exactly right. Great question.
So, we had a bad year this year. Next year, we have a really good year. Blue Cross Blue Shield, we battled, the last time we were with them, we didn't have a bad loss year, but we didn't have great one either. And they still wanted to increase it. You walk in here next year, we've only had a 50% loss rate. Are we gonna see a drop in rates?
Yes, so the good thing is that with this plan, if you have a bad claims year like you had this year and your rates go up, the rates that go up, the majority of that increase, the majority of that money is going into your claims fund, because they need it to fund the claims that they're expecting for the new plan year, because you had such a bad year this year, right? So that money's going in your claims fund. So if we don't end up spending all that in claims this year, that money's still sitting in it's your claims fund. That's the beauty of being self-funded. That's the good part. Your claims go up with Blue Cross, they're recouping their costs. They're not gonna give you that money back if every high claimant comes off the plan. Because that's money that they're just profit center, increase their costs, and they're keeping it. Under the self-funded basis, the increase goes into your claims fund. The admin costs didn't go up. You know, you can go through, I mean, we'll show it to you, but none of those things went up. The network costs for Cigna didn't go up. Our broker fee didn't change. I mean, none of that changed. All that
What
money's
about
going into
what
your,
about the reinsurance fee?
the reinsurance did go up. But not, the majority of that increase is the claims fund. I mean, anytime a reinsurance company starts paying claims for you because you have such a horrific loss ratio, they're going to have an increase in their premium. But the majority of that cost is going back into, all they're saying is, we didn't put enough money into the claims fund for the amount of claims that you had this year. So now we're gonna increase the size of that claims fund. But it's still your claims fund.
How much did our reinsurance fee go up? Because you say our administrative fee didn't go up.
Right.
Most of nothing else went up except for reinsurance and the
claims
cost of
fund.
our claims.
Yes, sir.
I get that there's pools sitting there, and that's what we're paying the bills out of. What did the reinsurance go up on that?
Shane, you got,
I think I've only got 7 copies.
Those people on the other end.
Who needs one down there?
Oh, I know I should have got my glasses.
need your glasses, Michelle?
You asked the question I want to ask. I mean, let's just cut the chase. I want to know how much it's going up.
Yes, well, let me,
I
let
mean,
me.
I don't need a lot of, I mean, I want to hear what you got to say, but I just want to know right now, how much are we talking about our insurance going
It
up?
depends on what we end up doing. I can tell you, there are some options that will allow you to save, I don't know, to save a little money off of this versus some others. You got, and let me make this statement before we go into, y'all are right at $1 million paid into your claims fund. Actually, just below that, your projected payout is right at 2.1. So it just, I'll tell you what I want to do. I want to make sure that, let me give, so that's $1 million. Y'all put in $1 million less. Michelle, let me let you see. Let me,
I got one more question for you.
Yes,
You
sir.
said you're a broker.
yes, sir.
You're not the insurance company.
No,
No.
sir.
So what if y'all switched us to Blue Cross Blue Shield? Could y'all save us money? Or do y'all even represent them? Or do y'all broker for
They
them?
wouldn't quote you probably to this year based on your high claimants. It would be a decline to quote because of the high claimants that are on your plan right now.
Well, the year that Justice Ash referred to, the bad year when they were gonna go up, it was 12% increase. And they come back and even lowered that after we were talking about switching to Performance Health. So they were willing to negotiate
Well,
that year.
But we didn't have a loss ratio as high as what we got. Matter of fact, our loss ratio was like, if I remember right, was like 70%, 80%. So
And they were giving you an
technically-
increase?
and
I
they
started saying
should-
that's a
yeah.
good loss ratio.
they were
Lord,
talking
they
about
like their money, don't
increasing
they?
until they realized that we weren't going, that we might be switching. And they came in and handed us an increase. Now, then they come back and they offered to go down to basically
I don't want that.
no increase, just across the board, same insurance. But I guarantee you this year they'd be coming back on that.
Yeah, I don't remember exactly what the loss ratio was that year, but I know we had several people that were, you know, we had a cancer patient, and I know we were,
Had to, they-
that's right, too, that year. And we were shelling out
But
some
the
big bucks.
majority of them were on the year before.
Yeah.
We only paid those about half the year. And it may have been closer to 100% than what I'm thinking, but it wasn't near what we've got.
Well, I just, yeah, I mean, that's,
12% on a fully insured is high for that type of loss ratio. If it was under 100, 12% is high. And I say on a fully insured basis because it's not going into a claims fund that you get money back on. It's just going to them and they keep it. So that's pretty high for that.
I want to ask Kelly a question real quick. Now, we've not been able to get a quote from Blue Cross or Blue Shield or from Stevens Group, right? Because we've not had this information, is that correct?
Right.
So if we could have had this information a little while ago, maybe we could have got a quote from them. But we're running out of time here. I mean, it's like you already waiting until the last minute to give us this.
Well, Arkansas law says that your renewal has to be out 30 days prior to the renewal date. Each state sets the laws, and like Mississippi is 60 days, so renewals get cut 60 days in advance. Arkansas is 30 days, so it's actually out early.
I understand the court of the law, but I mean, I think y'all could have got us this before, because y'all been talking about an increase for a long time.
We,
Well, we have, but we've been negotiating and trying to figure out what we're gonna get it down to.
Okay.
So
We'll hear what
it
the-
started off a lot worse than this.
Yeah, well, we want to hear some good negotiating.
Well, first thing, if you will, can you look at this sheet? If y'all grab this sheet, it might help bring some clarity. Here's, and here's, this is, Leanne, one down that way. This just sort of gives you a snapshot of your high claimant information. One thing about your self-funded plan is, in a self-funded plan, you get a lot of clarity. Now, the clarity for the claimant information, as far as this discussion and every eye that's seeing this, is just going to be claimant number 1 through 11. But you'll see your top claimant is currently sitting right at about $117,000 alone. Your second one is at 107, 104, 91, and so forth. You can look to the far right and you can see exactly what the diagnosis is. So this gives you an idea of what is actually happening with the members that are on the plan. If you'll come over,
And these are active members, not terminated members.
if you'll come over and you'll look, if you'll look on the left-hand side in the middle, it'll say projected aggregate claims. It shows your current claims through 9/30, and then you still have October, November, and December to go, and that shows that your projected total claims that will be paid on your plan this year is 2.78. So just right under 2.1 million. Now you funded to, you can see your projected claims fund at the bottom right here. So your projected claims fund is just right at just under $1,977,000, which is the shortfall. Ultimately, you see at the bottom of just over $1 million.
And I know this probably doesn't really make any difference at this point, but we've been with you guys for a year now. Why is this the first time that we've been hearing the word self-funded? I mean, we've been hearing that we're in a, this coalition with all these other counties to keep the rates low. I mean, you guys are kind of saying something almost completely different today. Like, I have not heard the word coalition one time in the other meetings. I mean, I heard the word coalition, keeping the rates low. I mean, I'm giving it to you that you've done a great job explaining it to us today. However, it's a whole new explanation, which makes me, I'm just being honest, makes me really nervous.
Well,
Well, now you're still lumped in with other counties on the reinsurance. That's what helps
we're-
you keep your reinsurance rates down. So that hasn't changed. It's not any different than it was a year ago.
that's what I talked about a little earlier. Your claims fund, you operate by yourself. So if you have a good year, you're not gonna be punished by somebody that had a bad year. But if you are associated with those, and it is important because those reinsurance rates, because of the law of large numbers, when you have a coalition of multiple counties coming, because I mean, again, while you operate, I think currently at 187 total employees that are on the plan now, you're actually a part of 1,700.
Okay, all right, we're lumped in with other counties in Arkansas only, correct?
Correct.
Why are we not lumped in with everybody on
Well,
that?
I don't know the crossing the state lines, and I'll be honest with you, I don't need to answer that question. I don't know.
Me neither. That's a
Yeah,
Scott
I'm
question.
gonna let
That's
somebody
true.
else. I'll get an answer as to why, but ultimately,
Because as
what,
Molly said, I thought this coalition, it was a big
Well,
coalition.
see, that's what Les said when he was here. Every other word was coalition.
Yes, sir.
Every other word he
Yeah, he
said
likes
was
that word.
coalition.
yes,
You
sir.
never
And
heard
he
the
said-
word self-insured. Unless I've missed something, that's never come out.
We thought we were in a big loss pool where if we had a good year, then ours would help somebody else. If we had a bad year, theirs would kind of help us. That's really the impression that we got when we joined this.
On the reinsurance side, it does. On the
But-
reinsurance side, it is full. Well, you want that on the reinsurance side. You don't want it on your claims fund.
Why?
Because it's your money, and when you have a good claims year, you want that money to stay in Mississippi County.
But now then you're talking increase of maybe over 20%.
Yes.
Do you have a number?
Yes.
Is it over 20%? It
It's 22%.
hasn't gotten any better since the last time you
Based
talked to
on-
the judge.
Oh, well, that was the lowered number. That's why we went to talk to the judge that day. It started off at, do you have the other one?
Shane,
Do what?
do you
What
have
was
that?
I can pull it up and I'll.
So, okay, at 22%, we keep the exact same plan, the exact same way we brought, you're just saying nothing changes.
Yes, ma'am.
No,
Yes, ma'am. Let me, we're getting ahead of ourselves here, so let me.
Really, we're not. This is what we really need to know.
No, I'm talking about, no, I want to make sure, your actual renewal was 74%. That's your rate increase. And we have been working since that 74% on that $1 million shortfall to try to find a way to work that down. And that's the reason that the president of Performance Health flew in here to meet with Judge Nelson 2 weeks ago, was to walk through. And he flew from Ohio to come down and meet with you guys and.
Well, you didn't meet with these guys.
I understand.
These guys should have been in on that meeting. He should have been on the meeting, I should have been on the meeting. Anybody else on this committee should have been on that meeting. And we weren't, and we're hearing all kinds of things out of that meeting.
Right.
That, you know,
and we were under the understanding it's completely impromptu, that the county had no idea that you were coming that day.
No, ma'am, we didn't. He was flying into Mississippi for a meeting, and while he was here, I said, listen, if there's any way, we'd like for you to come up so we can go to Mississippi County and meet with them, and also Crittenden County and Jefferson County.
now how many counties in Arkansas do y'all have?
12.
12 counties in Arkansas. So we know this county had a big major loss. What about the other 11 counties? How'd they fare?
Some had good years and some had bad years, just like you. It's just, I mean, this,
What county is suffering the largest increase, us or another county?
another county. Their claims were and again, it's just, unfortunately, it's just claims.
Michelle, do you have the cost per employee in front of you, what it was for 2019?
Yes, for 2019, it was $741.29
A month?
employee only. And $1031.33 for a family.
So $8,900 per employee. And we're looking at a 22% increase on top of that. So we're looking at real close to a $2,000 per employee increase. So So if we've got 200 employees, we're looking at an increase of $400,000. Am I looking at it correctly? We're working on our budget. This is pretty important for us.
Yes.
You currently,
are-
yes, sir, currently y'all are at 100.
Spot on, $400,000 increase.
With if we go with this integrated RX Medicare program,
But,
yes.
but
Wait,
Michelle,
what do we, yeah,
That's
that's, if we go with, see,
there's-
that's what I was asking.
Yeah,
What-
there's options, and so
Yeah.
there's different things that we have to decide on.
What
meaning
kind of
y'all
deductible
have to
are we
decide.
carrying? What kind of code
So it's 22%
stop loss are
with
we carrying
conditions.
with our employees right now?
Could go up.
Yeah, I
How
mean,
much is
that's,
our
I'm just saying.
deductible?
This 22% I'm thinking is probably the bottom number.
that's the best case scenario.
That's the cheapest we can get it.
Absolutely.
But it could go up to 42%.
43.
43%, thank you.
44.
So now then we're at
44.
$800,000 plus.
Yes, sir. So,
Increase.
Yes, sir.
Okay.
So what, here's, there's a couple of different things, and that's the reason that, we wanted to sort of walk through this, and I didn't mean that a while ago when I said getting ahead of
No, no,
myself.
no, no,
I
that's
just meant I
fine.
wanted to talk about that 43%. Should have started there, not at the 22. There are a couple of things that Todd Houston discussed with the judge that day when he flew in, was simply, one is you have some very high claimants on pharmacy. Here's a benefit that you have. There are programs that is implemented, they're out there, that you're not taking advantage of currently, that he brought to the table that day. And here's basically the opportunity you have. Under your plan design, what is the copays on the plan design? Shane, do you have it down there?
For the pharmacy, yeah.
Uh-huh.
I have it.
$20.
10, 35, 60, and then 250 for specialty meds.
Okay, let's get into the specialty drugs, and y'all have some people that are in that area, okay? Which means that when they're going and filling the generics and the brands, they're only paying 10 or 25. But you've got somebody that actually is filling a specialty med that they're having to take, then they will be up to 25% up to $250 every time they fill that med.
And then your claims fund gets hit for the
Hard.
cost of the drug above that. So the new pharmacy program that we're implementing, it's based off the Purple Book, which is a listing, a Medicare listing of top cost drugs, MS drugs, cancer treatment drugs, things of that nature. Humira, very expensive medications that a lot of people take. There's some diabetic medications in there as well. And so what the program does is they have all these manufacturers out there, pharmacy, and like I said before, pharmacy is a huge profit center here in America. But these manufacturers are federally required to offer so many discounting, rebates, assistance programs. You always see those commercials on TV. If you need help with the cost of your drugs, call this number for patient assistance. And so what Todd has implemented is a plan that goes through and it pulls whoever is your top claimants on drugs. Like say you have an MS patient that's costing over $100,000 a year, a Humira patient that's costing about, depending on if they're double dosing or not, $48,000 to $96,000 a year. And it highlights them and it says, hey, Performance Health, we have somebody taking this drug. And what Performance Health can do is they would reach out and say, okay, does this person meet income guidelines? If it's a single person, do they make less than $75,000 a year? If they're married with 3 kids, do they make less than $140,000 a year? And if they do, then they qualify for the manufacturer to pay the whole cost of the prescription for them. And so they are working with the patient and the patient's doctor directly to get them on that patient assistance program so that when the manufacturer pays for the drug, it no longer comes out of your claims fund and they're no longer spending $250 a month on a copay.
Now, Michelle, let me ask you something. You said we were not participating in that drug program.
Right, we are implementing
Okay,
it.
so assuming that we do participate in it, put the additional load on our employees, which we don't really want to do, what would we save? About, guesstimate.
You would
You're talking
say
about on
you
the
have some
claims,
high,
on the, yeah, 150,000 on 2 people,
yeah.
2 people,
And they would save $250 a month.
$3,000 a year.
the employee
Raised to
would,
that
that they're not
employee.
having to pay for that copay. So it benefits them, it benefits the county.
Was this available when we signed up with y'all?
No,
No,
it's-
sir.
it was not.
Okay.
You say you're implementing this, are you implementing this as a company-wide or just for our group?
Company-wide.
Okay.
If,
We've already got other counties doing it as of last month.
okay, so y'all have said that we have options.
Yes.
And those options range in cost increase from 22% to 43%. Without going into the option details, if we go to the lower option and only take the increase of 22%, are we lowering the coverage that our employees will receive?
No, sir.
It's just strictly on the pharmacy. That's the only place that it's affecting, is that what I'm,
Well, the pharmacy is just gonna, it's just gonna be a cost control measure that we can implement. If we can implement it, then your claims won't have to pay those high, you're simply gonna save a lot of money on your claims payout. And let me say this, we're talking about two people, just two being 150,000. There's no telling in 187 people how many will fall into this. Because if a person, correct me if I'm wrong, if a person is taking an MS drug, they're also likely taking, if they qualify for one, then they have the opportunity to qualify for any of them.
How long does it take to
Now,
qualify?
Tracy, short of throwing stones at you and Michelle, as our broker, why have y'all not brought this to us? Because we're laymen in insurance.
Well, it's new.
We do budgets and we're pretty good at it, but we don't do insurance and we're not good at it. So,
No, it's a new program, and it just rolled out about a month and a half ago. Just started hearing about it about a month and a half ago, working with Todd, getting the Purple Book printed, listed, and setting up how we were going to. You don't want to just go throw it out there. You want to roll it out in stages. So they're doing a phase 1, which is the highest level drugs, things that cost $100,000 a year, things like that. And then they're going to capture those people. And like Tracy said, a lot of those people are going to take other medications that maybe wouldn't have hit that 100,000 level. Maybe
From a
it's
generic.
maybe it's Trulicity or something like that. And so, or maybe it's just a single dose of Humira, which is $40-something thousand a year. So it's going to capture the first ones, and then it's going to say, well, if you're on any of these other ones and you qualified for this one, let's go ahead and move you all these other drugs that you're taking over to that as well.
But there won't be any interruption in medication.
Oh,
like
no.
You would still be able
No.
to go and get your drugs.
Oh,
and be
absolutely.
No
qualified
denial.
and-
And so, no,
No.
so like say the very first time we've implemented this and it's 4 months into the plan, and somebody all of a sudden gets diagnosed with something and they have to take one of those high cost drugs. Then they will go to the pharmacy and they will get their first fill, and it will hit your claims fund, that first fill. Because they do not want that patient to not have their treatment. But as soon as they get that pre-cert saying, hey, this, because any drug that costs that much money has to have prior authorization. So as soon as they see that prior authorization, they're gonna immediately reach out and say, let's work on getting them qualified for the patient assistance program. Let's work on it so that the second month's claim doesn't hit that claims fund, and so that the second month, that patient doesn't have to pay that to you.
Okay, so that's step 1 to get to the 22%. What, I'm surely there's another.
There
two.
is.
Okay,
There is.
There's one
let's go.
more
Okay,
step
let's
to
go.
it.
And it's
And I
important.
don't think,
Okay.
y'all know how much your employees make better than I do, but I mean, if it's a single person and they say that the income qualification is 75,000, do you think?
We don't
I
have
mean,
any.
nobody, but if somebody's married to like a doctor or something like that. I
Not
mean,
even our elected officials.
okay. So I think it's pretty safe to say that the two high claimants, and probably anybody else, like even in phase 2, when they start lowering it down and saying something that costs $5,000 a month or $4,000 a month, and start reaching out to those drugs as well. I think it's a pretty safe statement to say the majority, if not all, of your employees that end up being highlighted for that program will qualify.
We have already 4, just on renewals, 4 other counties. I'll tell you this, in two states, just in Mississippi and Arkansas, and this is performance health contracts only. Now, I'm not talking about groups that we have with, because it's a self-funded option that we're bringing to the table here, and it's one of the benefits that you have. But just in those 2 states, I forgot how many groups it was. It was 62 individuals with a total claim spend of almost $10 million just on those pharmacy claims.
For 62
I
people.
mean, like I said, y'all have, just identifying two, you can carve out 150,000. There's absolutely nothing we can do about these claims, ladies and gentlemen. There's nothing we can do about it. If people get sick, you're gonna have to pay them. Sorry,
No, I understand that. All right,
but we gotta find a way to carve it.
all right. Who do y'all work for? You're a broker, so who do you work for?
For ourselves,
Ourselves.
for you guys.
We
You,
work-
you,
yeah.
you
You're our
three,
client.
you three. Were y'all with somebody else at one point in time?
Yes, sir. We were the LS and Associates, who is your current broker.
Okay, so y'all left him,
We
or
have-
left that group?
We most certainly did. Yes, sir.
So
Okay,
Les.
stop right there. Go ahead, Mona. You just-
No, I'm sorry.
Okay, so is that why that you have asked for us to sign for a new broker? That would be y'all?
Shane
Yes,
and
because
Shane.
currently Tracy and Shane and Leslie are listed as y'all's broker right now, the three of them. And now that they've separated from Leslie, it's just a letter stating that it's gonna be just Tracy and Shane and not Leslie.
Leslie being the guy that talked to us the last time.
Yes.
Yes, sir. Yes, sir. So there were some things that you were asking about a while ago that I guess there would probably be somebody else that could answer those questions. I can tell you that from our point of view, I got your information that you haven't received yet. Don't know why you haven't, but I'm not your broker. I am your agent, and Shane and I are the ones that worked with you for a year, basically. And we're fortunate enough to earn your business. But for my wife and my two kids, I had to make a decision when something happened there, and it was strictly to protect my wife and my two kids. I'm here to make a living, but I work for you guys, and that's how I make my living. All I'm saying is, we had to make a decision to move just from his brokers to our own. Still the same carriers. All we do is operate as your agent and your broker. That's simply, we don't pay claims, we do nothing of the sort. But your back office support and everything that comes along with it, she's a director of operations for the
So
last
broker
10 years.
fees are not going to
No, sir.
increase?
No, sir. Absolutely not.
Well, why is LS coming to our meetings? Leslie, why is he,
Because he's still your broker.
he's still a broker?
Until that form is
Until that
signed.
form
He's
is.
currently our broker now.
Right, can he give us a better deal?
Who's
No.
left? No. Matter of fact, I mean, there's really,
I'm with you.
I mean, I'm being serious.
no, I know you are, and that's what I'm saying.
100%. But he can't.
The only way that we can get a better deal is to make some of those claims go
So
away.
if Leslie came here, he could give us other options though, maybe Blue Cross Blue Shield, maybe Health Advantage, or can he not?
No, sir, he's not gonna be able to do anything that ourselves or anybody else couldn't do.
So basically, we've got to stay with Performance
No,
Health.
sir, you don't have to. I'm telling you, Performance Health is your best option. We've done it, in your self-funded world, you just strictly go into the
And
reinsurance.
you don't work for Performance Health.
No, sir, we don't work for any carrier. We don't serve a carrier, we serve you.
But how come you don't look for us another carrier?
Well, we
Well, we
have.
do, we quote it out, but you have a kidney failure patient as your top
Okay,
patient.
you quoted out, who'd you quote it out to?
United Healthcare.
And what was their rate? They
We can't use
declined.
United.
They declined
Our
the quote,
hospital won't honor it.
Yes, yes, but when you're looking at the rate increase that you're looking at, we look at all
But
options.
you didn't try, you say you looked at all options, but you didn't try Blue Cross.
Blue Cross won't, they only sell direct in the state of Arkansas, basically. I mean, they don't have
We got
Shane
one.
lives in Arkansas, I live across the line in Mississippi, and that's where our office is based, but Blue Cross does not, they have some brokers, that they operate through, but it's unique in Arkansas. Mississippi is not that way, in Tennessee it's not that way, in Arkansas, for what it's worth. We'd love to work with them, but we don't have the same group of Blue Cross in the state of Arkansas. Not one.
Well,
Okay.
okay, let's move on to step 2, so.
Medicare eligible employees.
Okay,
There's a great opportunity for you there.
You can't force them.
No,
No.
sir, you absolutely
No, you
cannot.
cannot. But you can offer it.
But we can't use United here.
Right. Well, they would give us a quote anyway, supposedly.
How do you view that as affecting the situation? Is that part of the getting down to the 22%? How important is that?
It's pretty important. It would help your claims.
How many employees are you talking about?
You have mine
20,
I didn't get your email.
there. No.
27.
27, okay. But we can't force them, so what if we can encourage them, but what if they choose not to?
Some of these.
They can choose not to. However, 6 of the 27 Medicare eligible members are your high claimants, representing over $400,000 in claims.
When you say you can't force them, is that a federal regulation?
Yes, you cannot force anybody off of your health care plan if they're eligible for your health care plan, but you can offer them to go to a Medicare plan. And, I mean, a lot of times, I find that it's usually like quorum court members or elected officials or something like that, that's over that 65 threshold. And they were like, yeah, if it helps the county, then I'll go on Medicare if y'all are gonna pay for it, that's fine with me, like,
Can you not-
I'll do that.
Well,
And
you
I'm
said
not
if you're
trying
gonna, if y'all are gonna pay for it, is that what you said?
I didn't say us,
Oh,
y'all.
okay.
So how does that option work?
Basically, you would call them in, depending on who it is, and y'all may want to do it, depending on, you know, we can get the names of the 27 people and go through it and say, okay, well, you know, I know that these people would be glad to do it, and I'm not sure about these people, and, or I want to talk to the elected officials first, because obviously the way you talk to an elected official, about their options is going to be a little bit different than what, you know, because they have more skin in the game, they want to get reelected. So they want to do what helps the county out. We're not saying that somebody that's not elected doesn't want to help the county, but they have less incentive to do so. And so they, you know, you may want to have a different conversation with them, but basically just set them down and we can bring in a Medicare specialist that can sit down and discuss their options with them, help them make the best decision for them based on their current situation.
Y'all will take care
And
of all
offer it.
Yes, sir.
Yes.
So what you're saying is that would just simply take those the claims of those 27 people off of our claims.
Yes,
They would
right.
actually be on, so that would.
And the premiums for them would
depending-
be drastically less than what you're paying
And their-
for employee only right
And
now.
their
on the
benefits
plan.
would not only not suffer,
It would be better.
better.
Could we not structure it, or is this a possibility where the county, if we brought them in, where the county would pick up their, their Medicare supplement
Yes,
and their
so
drug card?
there's, section 105, he has, some paperwork he's gonna
Let
give
me,
you that.
I'm just going to pass these out so that y'all have a copy. This is, this is detail that, there you go.
No, sir. This is just information.
There you go.
There's been some changes to the laws because it used to be a big no, you can't do this, and now there's been some changes that allow it. Now, with y'all being a government entity that is not subject to ERISA laws, I still would suggest setting up a call between yourselves maybe and your attorney. And Todd has offered his attorney to speak to y'all, who's very detailed on the section 105 and how that works and how this can happen, and all the things that have to be done or put in place to make sure everything's on the up and up across the board on it, because it is a sensitive subject with your employees, so you want to make sure you're doing it the right way. He is available on Tuesdays and Thursdays. The attorney is, so if you guys want to get with your attorney and see what time he can talk, I would suggest that they get on the phone with each other.
So we're gonna have to accomplish these two things before the end of the year so we can keep our 22% increase.
Yes. Well, the RX thing we'll do that for y'all. And the Medicare thing we will also help with. I would feel better if you guys had
But
that
we gotta get all
with the
27
attorneys.
employees on Medicare.
No, I don't. I mean, I think that they'll be flexible on that. I don't think all 27. If we could get those 6 high claimants on there, that would be
And we're not targeting those 6. We're targeting everybody, you know,
Right.
all 27.
That are eligible, right.
Yes, sir.
But those
And-
$400,000 in claims hitting your plan right now is.
Yes, ma'am.
What if there is no better coverage under any insurance company, I don't care where they are, any better than Medicare and a good supplement?
Yep, I agree with that.
I've never, and
If they can get Plan G, it's $147 Part B deductible, and that's all they have to pay, and the rest of it's covered. The skilled nursing facility's
And I've
covered,
never
Part A is
gotten a
covered.
bill since I've been on Medicare.
I love it.
It's to their advantage.
It is,
is.
it absolutely is to their advantage.
So, how many, do you know how many of these 27 are elected?
I do not know
Okay,
that
I was
right
just
this moment,
curious.
but I can pull the
We
report
can,
and
we
find
can
out.
pull that information and then meet with whatever group
send
of
it
you
to
you
y'all,
want it
yeah.
to be. You wouldn't, you may not want everybody in, but if it's the
I mean,
insurance committee.
it's, everybody's
we'll-
invited to every meeting.
Okay.
All court members invited to every meeting.
Perfect. You just
They will
want-
be notified of the meeting. It's up to them if they come or not.
Okay.
And it's up to us if we come, but we're running out of time here, real fast.
Yes. sir.
Absolutely.
Absolutely.
And we've got to do something, and we do not, I mean, I'm just honest, I want Kelly to try to look for something better than a 22% increase.
Yes.
So we may, y'all may not be our brokers, I don't know.
So, out of those 27 people, they're all employees of the county, or would they, there's not any on like family plans or anything like that?
I don't know if
Does
there's
that
any
make any
dependent.
difference?
Now,
There are some.
yeah, there's
Does
gonna
that
be
make,
some.
does that make a difference?
It can. It depends. If they have family members on the plan, it could. It depends on who they have on the plan. I mean, I'm assuming they probably don't have children on the plan. It's probably just their spouse. Their spouse may be Medicare eligible and want to talk to the Medicare specialist at the same
So
time.
would we still pay for their spouse or no?
A lot of times, with
Or
the,
would they just get off the plan and pay their own, I mean,
the majority of the time, when a husband and wife are Medicare eligible, and he's on the insurance, or she, whoever's the employee, is on the insurance because the county pays for it, so it's free to them. They're not going to pay that family rate to cover their spouse. They're going to have employee only, and they're going to have their spouse go on Medicare because it's cheaper and better. So,
oh, I see, okay. And if
so
they're
most of the
not,
time they
then
won't.
maybe it's just a simple communication issue.
Yeah.
Okay, I gotcha. Okay, that makes sense.
Because they wouldn't spend all
Okay.
that extra money.
Okay, and if it's good coverage, I don't.
A lot of
It
people
is
are
really
just
good
reluctant to give up their company insurance
Right.
when they retire. When they reach Medicare age, they're reluctant.
Because they
Right.
just don't understand
They
it.
don't understand. I'm convinced you're much better over on the Medicare side of it.
Mm-hmm.
I know it is for me personally. I don't take the county insurance simply because I'm better off over there the
Yes,
other
sir.
way.
Weren't we threatened or notified sternly by Medicare that we got in trouble because we were paying their Medicare supplements or their Medicare payments, weren't we?
Right. I was in the meeting, I was in part of the meeting when they came to meet with the judge for just maybe 20, 30 minutes, but then I had to leave. But during that time, this came up, and so I explained that when they first started Affordable Care Act reporting, the 1095s that we are required to do, it threw a red flag because we had several eligible employees who declined our plan. So that just started the questions, and anyway, we were told, and I sent that to them. We were told by an attorney that we could not reimburse for Medicare premiums, and so we stopped. So I gave that information to them, but they've done some research on it, and that's why they're saying
Here's
that,
some reimbursement. I
We
don't
can
know.
do it now?
well,
The attorney is saying you can because of this 105 language, which is why, because of the previous experience that you've had, my suggestion would be to have your attorney and their attorney sit on the phone and go through this, because your attorney knows Arkansas law forwards and backwards. And they know the government and the county and how it works, and they know what happened before. And that way they can fully explain their side, and this attorney can fully explain his side and give him all of the legal guidance on it. And that way we can make an informed decision. I would rather all the questions be asked and all the things be said. I would highly suggest the insurance committee maybe sit in on that call as well, or maybe let the attorneys talk first and get their bearings, and then call the insurance committee in, so that you can have your questions answered as well. I'm glad that he said yes. That's obviously a win for the county if we can do it. But because of your previous experience, I like to cross my T's and dot my I's. So I'd rather the attorneys speak to each other first.
I hate to keep beating a dead horse, but I gotta say this one time. When LS first come to us, Leslie, he wasn't talking about a 22% increase. He was talking about less.
Well, he didn't have any
He didn't
numbers.
have any claims information.
Yeah, no, he read them off to
Yeah,
us.
he did have claims information. He
He had
had,
claims information, but he didn't have insurance numbers. He didn't have any of these numbers. And I know that because Todd told me that. Because I asked him, I said, why is Leslie
I'm
going to
gonna
them
ask
talking
this question one
numbers?
more time. So if we contact him, he's still a broker, correct?
He is.
And he is our broker now. And he
Absolutely.
comes in here, you don't think he can beat that 22% increase?
I do not. And if he did come in with some weird off-the-wall carrier with some lower number, I would be concerned what the contract looked like.
So we were self-insured last year too.
Yes, ma'am.
Or currently we're
Yes.
self-insured.
Yes, ma'am.
So currently the deductible is $500, is that right? And that is what is it MediHop, that's what the MediHop pays, and then the catastrophic picks up at 5,000
Yes,
or
ma'am.
something, is that right?
Exactly.
Okay, so, all right. And again, I know I've asked this and I may not be asking it correctly. So if that first company, the MediHop, goes out of business, will we have a way to pay up to that $5,000 deductible, or will we be paying those for the people in the county?
Actually,
Yes, so MediHop is just a name. It's just a trademark, private labeled name that Leslie had trademarked. The product is actually through Equipoint Partners, who you
That's
get,
who we pay every
That's
month.
who
right, you get a bill from every month. And the product's called Pre-Med Defender. All Leslie did was take that existing product, like Tracy mentioned earlier, the whole state of Oklahoma uses that product for their employees and their insurance. He took that product and he just white labeled it to his MediHop name. It's just a name. But Equipoint Partners, going back to your question, Equipoint Partners is not going to go out of business, but the payments are reinsured by National Guardian Life. So it's a huge.
So even if
reinsurance
Les
carrier.
goes, even if his MediHop goes out of business, we will not be paying those claims up to that 5,000.
Correct.
yes, ma'am.
That's
We
right.
will. It'll still be.
Equipoint Partners is your partner on that, not Les
Okay.
Smith.
Okay.
Right.
Les is a broker, and that as she just said, he named their product a name that he has called MediHop. That's all it is.
Okay.
That's all
And
it is.
I would say that name changing. He's trying to sell his
You
company.
can call
so.
yours Meta-Jump.
I think I'll stick to the Pre-Med Defender.
I think the
that
Pre-Med
Equipoint
Defender,
uses.
it's
I like
solid
it.
across the nation, so, and that's,
Yeah.
and that was important. Let me say this, there is one thing you can do. You can call the municipal league, but you don't want to put your employees in that,
How come?
because the benefits are horrible.
Really horrible.
I'm just gonna tell you, everybody that, and let me tell you, it's not an insurance product. Y'all do understand it. It's a trust fund. It's a trust fund. It says it on the front of their book. This is not an insurance product. It's a trust fund. Shane, correct me when I'm wrong on this.
We got
But but I need,
that so bad.
if you want to water down the benefits, go to them. 'Cause I'm gonna tell you what happens. 30-day stay. After 30 days, your employee's paying it.
Yeah, so somebody gets airlifted, somebody gets in a bad car wreck, gets airlifted in ICU for 3 months. Only their first month gets paid.
After 30 days, the bill
municipal
starts
league.
going to your employee. That's how they control their costs.
What company is this?
Municipal.
The municipally. I mean, I'm just being
There's a
very,
lot of places in
I'm being
Arkansas
very
that
frank with
that
you.
have them, and it's scary.
and we have tried to help people, but their price point is low. And the reason, guess what? You can't go to hospitals outside the state of Arkansas. Just the way it is. I mean, I can't tell you how many people we sat with and said, they'd say, get us out of this. And we'll tell them, we'll try to get you out of it, but you're going to have to pay the money to do it, because they're charging you a very good rate because they control the claims. So there are like Miller County. We moved from the municipal league, to this year, and they had an exception because they were sitting on the Texas line.
Our judge talked to us about going to municipal league, so, or checking into it.
I mean, if you want to just water down the benefits, do that, and we can go back and just water it down. We try to find a way to water it down and save money. But if you want to keep the employees whole, with your benefit is a Cadillac plan.
Well, and like what you're saying, exactly, because right now, so in essence, we have a $5,000 deductible, but we've taken out the second that's doing the $500 deductible where 84% of our people are. You see
They
what
have
I'm
to pay
saying?
extra to get that $500 deductible. We don't pay for it, the employee has to pay
Well-
extra. But that's, you know,
I mean, in essence, we are paying for it. So if everybody just went to the straight $5,000 deductible plan, I mean, I would guess it would go down. But that
Oh,
would
yeah.
be,
Oh, absolutely.
Drastically.
Hey, if they're not gonna have to pay those claims,
I mean, you see what I'm saying?
That's what the
Because
municipal
you
league
got
does.
84% of people that are falling under that, you know, that don't
under
ever
the
touch.
5,000.
Yes,
Yeah,
sir.
that don't ever touch the 5,000. So that's where you're talking about the Cadillac plan, is that we have that,
Right.
that hybrid, I guess is
Yes,
what you
ma'am.
call it.
every group we have across the nation has that. We don't have anybody that, we don't build it that way.
What if we pass that whole cost on to the employee for the $500 deductible?
Absolutely. That you could. Yeah, I mean, we could just go to a $5,000 deductible plan. I can pick, listen, Todd is sitting on ready to do we're trying to come up with anything we can to figure out a way to deal with $2.1 million in claims. Y'all just got sick people that went to the hospital a lot this year, and it wouldn't matter what care you had. They got to find a way to pay for it. We can go get 500 carriers and bring them in here, and they're all going to look at it and say sort of the same thing. How do we fund $2.1 million in claims?
Here's a thought of mine right now. Leslie's still our broker until we decide to do something different or whatever. So I think we just need to try to have another meeting as quick as possible, have him come in, see what he's got to say. And then, I mean, check, consider these, we can all sit here and think about it, we can all discuss it, and not open in front of the press, but about this, like Molly said, the deductibles. I don't want to pass any increase on to the employees. Our employees don't make enough now. But we got to figure out a way to pay for this and get the best for our employees at the best cost. And I think we need to look at every option, but we're running out of time, so I think we just need to have Leslie, here's our current broker, come back in next week, have Kelly check on as much stuff as she can. I know she's overwhelmed, but so, and this is to you, Chairman. I mean, I would like for you to call the meeting again next week and maybe have Leslie come back, or even later this week. I don't care, but because we need to figure out something quick.
What do you want to say, Betty?
I said next week's Thanksgiving. It's gonna be short
It's gonna be a short week.
week.
Mom, you got anything you want to add or say?
I mean, personally, no, I don't. Not at this point. I don't. I understand I guess I understand as good as I'm going to understand. And
Would you like for us to go back and come up with a proposal that cuts that $500?
no,
Just to see what the number.
no. I was just trying to kind of get it straight in my mind.
Well,
that,
it's
you
simple
know,
for us to give you that number, what I'm saying, so that you understand what you're dealing with.
No, I certainly
We're
would not
trying
want
to
to pass
find a way.
no,
We're
I would
trying
not
to-
want to do that. I was just simply
Right.
stating, I guess, the obvious to myself. That that's where the big, that's why it's costing us so much.
Do they have this?
Some of us do, some of us don't.
So if you look at the claims factors, and you see that currently you're putting in that 9, it's about midway down just past midway down, it says claims factors, and it says $949,000. And then you look over at the 22%, and it says 1.462. Do you see those two
Yep.
numbers? So that increase, that's what's going into your claims fund.
By
So
raising,
yes,
so
the
it'll
rate
cover
is
it.
going
Yes, ma'am.
up, but it is going into your claims fund. So our hope is that even if this 22% is the best we're gonna get, because we don't wanna water down the benefits and we don't wanna pass costs on to the employees, that if we can get some of those high claimants off the plan by putting them on the pharmacy program and having those pharmacy claims come off, and by putting the Medicare eligible ones on Medicare instead of being on the plan, that money, or the large majority of it, will still be in your claims fund at the end of next year.
Right.
So
That would apply to our premiums in the following year that would possibly
bring
give us
all of those back down.
but possibly give us a decrease.
Absolutely, absolutely.
I've never seen insurance give anybody a decrease. I've seen them stay the same, but I've never seen insurance go down.
I had a county last year get a 12% decrease.
I'm just telling you, I've never seen it.
And you're not going to.
That's the way self-insureds work. It either goes up or goes down. When you're in a fixed plan like Blue Cross or whatever, they may come in and say, we're not gonna have a rate increase, but they don't give you a reduction.
Correct.
If you're in a self-insured group, which basically that's kind of what this is.
Well, I've never been in a self-insured.
Right,
group.
that's
I was
what
always
I
with
say.
state of
But
Arkansas.
it does work, because I'm associated with some where they do go down.
Well, I sure hope ours goes down next year.
Well,
I'm
it
gonna
would, I
put
mean,
one
that
thing
would be
in,
simple
and then I've gotta
math,
go.
wouldn't it?
Fred,
Very seldom do I get phone calls on anything that takes place on the Quorum Court. I had 2 this morning from people that do not work for the county, but have people that, kin folks that do, and their exact words were, if their insurance decreases, they'll look for something else. That's, that's it in a nutshell.
You know, that's been our biggest challenge.
did you get business?
The reason we work with so many governments,
sir. I had set
county
one down
governments,
on
is
your-
that very thing, because
But
your
these
budget
people
is.
don't, they're not insured, they're not county employees.
No, I understand.
They have kin
That's
folks
less-
that are
Right.
county
That's
employees, so
mine.
this is being talked pretty widely in the county right now.
39% of employees
I
across the
didn't get on-
nation will
I
leave
just
a
set
higher
it, I
paid
just
job
set it
to
down
get
on top
better
of your book
benefits.
earlier.
Thank you.
I stayed
I
for
wanna
the
ask
lower
a
paid
question.
job.
Yes, sir.
I was sneaking it in.
Say we do
Fred,
this
are you
22
finished?
Yes.
We do this 22% increase. We get halfway through the year and our claims are less than 50%. Can we reevaluate mid-year?
No, sir, you're going to enter into what you're going to do. The money is still there.
Right.
But no, sir, you would address that, in the, when you come around
Next
a
year.
year from right now.
Yeah.
And just, and like we said, you're paying the money, but yes, sir, that's a
Good
great
question,
question.
good question.
Great question.
But it's sitting in your claims fund, so it's still sitting there, it's still your money.
So, okay, so will we,
Neil, are you finished?
so would we still be with lessons?
Bubba, you finished?
Hang on, I got one last question.
Molly's going on here.
So would we still be with Les's company or not with Les's company?
That would be your decision.
So, hang on, if we go with y'all, do y'all work with Les anymore or no?
No, ma'am.
Okay.
All right, I got one more question.
Okay.
Yes, ma'am.
Okay, all right, I was on the phone with the collection agents this morning, not over any of my bills, but over this Performance Health not paying a medical claim, $195. They turned me over to a collection agency. And, I don't want my credit run, but why are we constantly having to make sure all our bills are paid and they're just, any claim, it's a pain in the rear. You gotta call this person in Mississippi, Jenna's her name, Betty. Now, is she still gonna be with y'all?
No, Jenna's not with us, she's at Leslie's office.
So who we gonna call in the future? Cause she
Jenny.
has helped, who,
Jenny,
where's Jenny? She works for y'all, or
Yes.
with y'all? She gonna be in,
India, is she?
she's not, she's not.
is she gonna be in South Haven,
And we're
Mississippi too?
actually in the process of working to open up an Arkansas office as well,
Okay.
so.
But, I'm serious, I've been turned over to collection agents, that's not good, I don't owe this money.
So then, okay, so without looking at it, was the claim filed to the insurance company?
Yes,
And what
they
was,
said they didn't file it properly. So the insurance company told me to have the
doctor's office?
The
receipt?
doctor's office call that. Doctor's office don't do that.
No, so,
It's like pulling hen's teeth.
It is.
you can always just call me or Jenna. Jenna's pretty good at it.
Possibly in the future.
Possibly in the future, you could always just call me. But a lot of times what happens, and this is with any insurance company,
I've got one.
when the claim comes in, it has a bunch of coding on it. The insurance company legally cannot change a single code on that claim form. They have to process it exactly the
I
way
know,
it's
I know.
submitted. And so the problem is if the doctor's insurance biller puts the wrong code on there, the only thing the insurance company can do is send them a letter back saying you've used the wrong code, we can't pay this. And the insurance biller is responsible for actually reading that statement and fixing what she did wrong.
Well, okay, here.
And sometimes
But
that
that's the problem
fails.
with that is they turned me into a
Sometimes that fails
collection.
to happen.
They
Yes.
turned me into a collection
Because she was
agent.
too lazy to read it and fix her code, and she just sent it over to collections. But we can fix, we can work on
The
it.
only thing I do want to say is since we're on the discussion of Les, we didn't want to leave him.
Right.
Y'all need to know
10
that.
years.
We didn't want to leave him. We didn't have an option.
Who's your insurance with?
We're self-funded with ABA is the TPA, with the same pre-med defender product you have. But let me say this, the service side of what you're talking about, that woman right there hired every one of them and trained every one of them, and she's run that organization for 10 years. So when she walked out the door, it obviously had a significant impact. I want y'all to know, the service from I-1 will only be better than what you've known in the past because she's the very one that's trained every one of them.
I think they have a right to know why we left.
Okay, he was selling his company. I'll make this brief. And we built the state of Arkansas and Mississippi for him. I don't work directly for Les. You know, I'm independent. I only earn a commission on groups that I am fortunate enough to earn their business. And Shane and I and two other guys in the state of Mississippi have doubled Les's business in the last 3 years. He's been in business for 25 years. He does a great job. He knows a lot about it. When he was selling his company for a lot of money, the contract that they sent me did not even say I'd get paid. Did not have
That's
the
a good
word.
reason to leave.
Didn't have the word.
Yep.
I got a wife, 2 girls. I've worked my tail off. I've called on 200 people in the state of Arkansas. We got a lot of groups now. They trust us, and we've earned their respect and their trust.
So if he's selling his company, then who would, so he wouldn't be even,
They pulled the offer
they pulled the
They
offer?
pulled the
the
offer when we left.
when they found out we left. He sent us a contract that simply said this. There was no compensation. The word compensation was not in a 9-page contract. If I was terminated for any reason, or if my employment terminated for any reason, whether it was at will or fired, then I could not work for the next 2 years on any of the groups that I had built up. So in other words, if I
You had a
signed-
no-compete clause if you signed the
if I
contract.
signed it, they could have fired me the next day and said, all those groups that you've got, you no longer work for us, and if you go call on them, I had to go to the state of Florida, waive a jury trial, go before an arbitrator to determine whether I was going to be able to continue to make a living for Angie and my girls. Same went for him. She couldn't work in the United States of America for 5 years.
In the insurance industry, in any
So when the
capacity.
company pulled their offer to buy
Dead
his.
serious, that was my
When the other
contract.
company backed out of buying his company, this is the contract that Les sent y'all 3.
No,
This was
no,
the
that's the
contract he sent
contract
us
when he was selling
to
it.
sell it. He was
For us to
selling
go
it
work
to
for
them,
them.
and that was the contract that he negotiated with them.
And
for
y'all
us.
left right shortly after that.
There was
Well, I
So
begged
you-
him for
so you-
3 weeks to reconsider my contract because I couldn't sign it. I have 3 children I have to
Justice White, do
feed.
you have any comment that you'd like to make? Because we got this down to 2%.
2%, I'm ready.
I think Molly, did you have another question?
That means we can do a raise, but
Now, you got another one, Molly. I know you do. You got one more in you.
but my
But he is looking to still sell his business.
he-
that
yeah.
business deal just didn't go through.
But let me say this, and it's the last thing I want to say about that. We did go meet with him because when we resigned, the attorney says y'all better resign before he sells the business. Otherwise, they're going to inherit your contract, and you're going to be bound to them anyway. So that's the reason we resigned, to protect our families. We did go to him, or he got us to come to him to agree to work with him on the current block of business, and we said we would absolutely do that, work on it together. But we were starting our own brokerage, and we're going to continue to grow from there. And after we had that agreement, he simply just said, anything that you do, he changed it to say, if you get another group, it has to be part mine. And we just said, well, we can't do that. So, yeah, 100% transparency. Now y'all know we're not tiptoeing
You got a
around.
card?
I do. Let me see if I have any more.
I've got one I can send you a copy of.
No, that's fine. That's
Okay,
fine.
we're
She's
adjourned.
got it.
What about Kelly? Kelly, do you have any questions?
What do you want me to do? What do y'all want me to do? Because
you come at 1:30.
Right now, you're at 15%. That's what I'm saying.
Thank y'all for coming, and thanks for being transparent on that. I appreciate it. I'm glad you brought that up.
What he means is thank you for putting up with me.
No, he's fine. He's doing what's best for the
That's
the
right.
county. That's his job.
You have a
I
hard
get
job.
it. I get it's hard to wear 2 hats. You have to be responsible to the taxpayers and you have to be responsible to your